Hi everyone, I am Shay and welcome to Sky FX. So for today's presentation, we are basically just going to be covering the introduction to Forex trading and what Forex trading is, and these are your basics that you will always turn to as a trader and when you are doing Forex trading. So let's get to the presentation. Hi everyone, I am Shay and welcome to Sky FX. So this plan and this video is just a presentation to welcome you guys to what the Forex industry is all about. So let's get to it. Good morning, everyone. I am Shay and welcome to Sky FX. So basically this presentation is an introduction to what Forex trading is and the basics that you need to know when you are being a Forex trader. So let's get started. So this plan entitles you to have 30-minute weekly lessons, 10 lessons a month. So it's 8 lessons plus your 2 one-on-one lessons a month, unlimited signals, free mentorship, and trading psychology. So what is Forex trading? Forex trading is when a currency is traded in the marketplace in exchange for another. Forex is known and is considered as OTC. There is no centralized exchanges or match orders. So OTC is over the counter pretty much. Forex is a very volatile market, meaning it's unpredictable. You can lose money very easily. It's not a get rich quick scheme. Consistency and patience is key. So mistakes when people go into Forex trading is that they lack knowledge, they're expecting to get rich quick, not treating it like a business, placing a trade without a plan, allocating too much capital per trade, allocating too much capital per trade, not setting a stop loss, trying to predict the future. If you keep losing, they stop trading, making multiple correlated trades, using incorrect volumes, and trading with money that you do not have. And yes, SkyFX, our job is to help you invest the time to help you learn before you go into investing Forex trading. Keeping track of your trades, planning your entry and exit, practice proper risk management, eliminating your emotions, leaving room for volatility, and adapting to market patterns. And also, we are here to make sure that you are constantly learning. The more you learn, the more you earn. Okay, so then you get different types of traders. You get a day trader, swing trader, and a position trader. So a day trader, you trade for the day. Market participants avoid holding anything after a session, and you close at very high volumes. And then a positions trader, you trade based on your perspective in the market. Instead of monitoring short-term movements, you look more at long-term trades. Okay, then your swing trader. This you take advantage of a longer time frame and you hold for a couple of hours and a couple of days and so onwards. Then you get your time frame. So if you look at your charts, on the top of your chart you have like M1, M5, M15, H1, H4. So those are your time frames of the chart. So if you look at your candlesticks on your chart, each of those candlesticks represent the time frame in which you are trading. So if you are trading M5, which is M15, 15 minutes, meaning each of those candlesticks indicate 15 minutes. Okay, so you get different times when you get weekly, monthly, minute, daily, hourly. Okay. Then your Forex lingo, these words are so important so you understand what you need to do as a Forex trader and understanding the basics. And when you're placing a trade, these are things you use on a daily basis when you are trading. So number one, you get your Forex quotes. Okay, so if you look at your first symbol, we're looking at Euro USD. So your Euro is your base currency and your USD is your quote currency. So meaning that the exchange rate tells us how much of the quote currency is needed to make 1 unit of the base currency. Okay, so the euro is equivalent to $1.17294, the pair value. Okay, so if you're looking at this here, you're looking at this red arrow, meaning that it's decreasing if you're looking at that price. So yeah. Okay, then you'll get a quote value, which is your pip, percentage in point, percentage interest price. It's normally your 4th unit from your decimal point. So 1, 2, 3, 4. And then it's basically the difference between your entry price and your closing price. So your opening price and your closing price. So the difference between these two currencies is 5 pips. So it's the 4th decimal point for the exception of yen currencies. So with yen currencies, it's 2 decimal places. So look at this one, it's 108.25, and then that's your opening price, and then your 108.28 is your closing price, and the difference is 3 pips. Okay, then you get trading lots. You get 4 different lot sizes, but I'm discussing 3. So I personally only use standard lot size, which is the most common lot sizes that people use. So you get standard, mini, micro, and then you get nano. I haven't mentioned nano yet, but there is also nano. So your standard lot sizes, meaning it's $10 per pip for your USD, basically for your major currency pairs that you are trading. When it comes to fundamentals, it's slightly different. So 1 lot is equal to 100,000, and then you multiply that by your decimal placings that you have, and then it is equal to $10 per pip. Then you get your mini, which is 1/10 of a standard of your standard lot size, which is 10,000 units. The pip value is $1. So you say 10,000 times your 0.001 is equal to $1. Then your micro is 1 out of 100th of your standard lot, meaning it's 1,000. So it's $0.10 pretty much. So so standard is 100,000, mini is 10,000, and micro is 1,000, nano is 100. Okay. Then we're going to look at leverage and margin. This is a leverage of 500 to 1, or 1 is to 500. So basically, we're going to explain leverage and margin is actually the same thing. When you open a position, your broker requires you to put down a percentage of its total value as collateral, meaning security for your deposit. So the margin is held while you are trading and is returned once you close. So any losses incurred while your position is open are taken into your account funds, are taken from your remaining account funds, I mean. Okay, so here's an example. If you have 5,000 Rand in an account open with your USD, okay? You're using 1 lot and your margin required is 2%. You would be controlling 100,000 of currency. Your broker lends you 98,000 for your position, setting aside 2,000 for your 5,000. So if your account margin is 100,000 times 2% is equal to 2,000, your remaining balance will be 3,000. So for this one, we're looking at a leverage of 1 to 50. So if you take your 100,000 into your 2,000, that gives you 1 to 50, if it makes sense. So for every 100,000, you are getting 2,000, pretty much. Okay, and then if you look at these things, so this is your balance, your equity, your fee margin, margin level, and your margin. Okay, so where does your equity come from? Your equity is the total value of your account, so your 26,000 here in this account, and plus your active position. So this is your 35,371.85 plus your margin. So this amount, no, this amount, your free margin plus that amount will give you your equity. Okay, then we're looking at your bullish and your bearish. So it's pretty straightforward. Bullish, BU, meaning buy. Going long, meaning an uptrend. So going long, if you think of a person who's tall, you're going up, they're going up. Then bearish is sell, going short, downtrend, meaning you are low in height and you are going downwards, if that makes sense. Then you get two things, two types of trades when you are doing bullish. When it comes to bullish and bearish, you get a carry trade and a swap rate. So I'm going to explain that in a moment. Okay, so swap rate is the interest earned or paid from a holding position overnight. So the credit from your account is calculated based on the interest rates of the currency pairs. Okay, and when a position is held overnight, it is referred to a carryover, well, like a swap over type of thing. So you're bringing that over into the next trading session. Okay, and then you will pay interest on the currency that you sold and receive an interest on the currency that you bought. So that's when it comes to your buying. Okay, then a carry trade happens when you buy a higher interest rate currency and sell relatively at a low interest rate. By being long, there's a higher currency, and by going short, meaning sell, there is a lower currency expected. You can earn interest in between the two currencies, and this is known as a carry. So that pretty sums up your bullish and your bearish terminology and the two types of trades that you get up. So you get your swap rate and you get your carry trade. Okay, then we're going to look at your basic readings of your candlesticks. So this is very, very important when you are trading. This is basically, you can tell where you're actually going to enter and you're going to exit your trades. So I'm going to explain the candlestick. So you got your body of your candle, then you have your wick. Okay, so this is your bullish candle. So this is your high and this is your low. This is pretty much where you'll determine your support and resistance depending on your highest high and your lowest low. Okay, then you have your closing price and your opening price. So why? Because it's bullish, it's going up. So your opening price is going to open here and then it's going to start going up to where you're going to close your trade. Okay, then bearish is the exact opposite, meaning sell, meaning downtrend. Your opening price will be by the highest point, and then your closing price will be at the lowest point. Okay, so that pretty much sums up this week's lesson. Basic terminology and things you need to know when trading that you can apply, the terminology that you need to know. So when you are trading, you know exactly what these little details are and what they mean and how they're going to benefit you. So for next week, we're going to go into a lot more detail into candlesticks, fundamentals, support, resistance, trend, and building your knowledge of how to read those particular things. So thank you so much, everyone, for joining. And I hope this lesson was good. So we are going to cover everything, technical, fundamental, all the stuff you need to know about trading. So cool.